Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host for today's session of Daily Stock, in which we are going to look at the quarterly earnings and the future prospects of the logistics giant UPS. This firm which delivers not only day-to-day products but highly demanding and logistically difficult things across the world. Is a go-to player in the logistic worlds for the supply chain solutions as well, and one of the biggest companies with the market cap of around 150 billion US dollars. We are going to look at its quarterly earnings for the third quarter of this financial year, which was released a month back, and afterwards we will be considering its technical charting to see if there are emerging opportunities in near term to take advantage of. First, we go to the quarterly statements to consider the fundamental aspects of its financials, so we get a good grasp of its business situation, and accordingly we can think about the trajectory it is likely to take in coming days, coming weeks, and coming months. This is the consolidated balance sheet for the quarter ending September 30th, 2023, with this humongous balance sheet. It has the firepower to meet the challenges, and there is not much to worry about on that front. The question is whether it is profitable enough and what it is doing to increase its profit, because that is the driving factor behind the share price of any company, and that is what we are concerned with. For the last couple of quarters, the earnings have been tad lower compared to what it was earning in the financial year 2022, and that is simply because in pandemic days, particularly during the pandemic and in post-pandemic year last year, there was a quite high demand for home deliveries of various products. But as the economy has gradually opened up and now the people are enjoying outdoor shopping, etc., we have seen that there has been stabilization of the shipping, and that has resulted in the reduction of revenues for the logistic firms like UPS. It is still earning substantial revenue and the operating profit as well as net profit. The only thing is that it is lower than what it was a year back, but I feel that is kind of expected, and in moving forward, we can expect its operating margin to get better as it is trying to align with this new reality and reduce its cost while trying to raise the revenue in the ongoing environment, in this challenging environment. For the 3 months ending September 30, 2023, the total revenues were upward of $21 billion, which is a reduction of more than 10 percentage point if we look at the revenues for the same period of 2022, where the revenues were more than $24 billion. And after having considered this reduction in the revenue, we also have to look at the expenses. As the revenues have declined, so have the expenses, but to not to that extent, and with the revenue decline of more than 3 billion US dollars, while the expenses have only dipped by 1.3 billion US dollars, we have reduction in the operating margin, which has pushed the operating profit lower to just a little above 1.3 billion US dollars, and after deducting interest and taxes, we get to see that the UPS has earned the net profit of US dollar 1.127 billion, which is quite a good number. The only concern is that it is even less than half of what it was earning a year back. So on that count, there has been negative reaction in the market for last couple of quarters. The share price of the UPS has gone on decline, and it has been continuously trading in a negative manner, in a bearish manner. But I think the things are likely to reverse, and though it is too early to say if this trend of lower revenues is going to reverse in coming quarters or not, but the company is taking steps to reduce its operating expenses and bring in more and more revenues by raising the charges for consumers to the extent possible. So it has tried to improve its operating margin even though its revenues have declined because of the lower demand. So in a way, it is in a slower lane, and it will have to adjust to this new traffic in these slower lane. Now, if we look at the cash flow, free cash generated by the company has also reduced substantially, and that is showing up in the reduced dividend it has declared, and the buyback program is also being scaled back. Now, we head to the technical charting to see how things are unfolding in last couple of weeks, couple of months. This is the UPS charting with each candle predefined at hourly, and for last couple of weeks, the things have started to turn bit brighter, and it has now successfully turned the corner and risen from 134 to 154, and we can expect these bullish trajectory to continue at least in near future unless there is any significant break below these immediate swing low. So the price level around 150 is going to be key for the immediate trajectory of the UPS, and unless there is any fresh break below those levels, I feel we do have to go with the flow and keep looking for the opportunity to buy. So buy on dips is the good strategy to work with while it is still making higher highs and higher lows in these short term environment where this charting has shown that for last couple of weeks it has tried to gain the lost ground, and since the release of its quarterly earnings it has indeed found support amongst the investors, amongst the buyers, as many of the investors are starting to feel that maybe the worst is behind us, and in coming quarters, the UPS is likely to be able to revive its revenue growth, and in course of time, we might actually see the increase in net profit. So, keeping that possibility alive, I think the price area around 150 needs to be kept in mind, and as long as this formation remains of higher highs and higher lows, we can keep looking for the opportunities to buy. So over next couple of days, pay attention to the price formation of the UPS in this short-term charting with each candle predefined at hourly, and as long as this trajectory holds, we can continue to apply the buy on dip strategy. And in today's session, we had the FOMC announcing its monetary policy, followed by Mr. Jerome Powell's testimony, which is continuing currently as we speak. And as expected, the Fed has decided to keep the interest rates unchanged at 5.25%, which is the median band. And I feel that the rate cut is still a couple of meetings away. And in this kind of environment, we have seen that the inflation has now inched back towards the Fed's mandate of holding the inflation close to 2%. So, if the Fed is able to meet its target in coming months, it will start to loosen the monetary policy, and in that kind of environment I think the Fed will have more opportunity to rise further. But for current scenario, I think we do have to be cautious, and because of that we need to consider its medium term as well as long term charting, which is not that promising. For the medium term charting, if we make the candle period daily, we get this formation of lower highs and lower lows. And in this case, it is really important for the UPS to successfully hold and cross above the price levels of around 170, which is close to these prior swing high. And if it does that, then we will have the formation of higher highs, and maybe in due course of time we might get a higher low in place as well, opening up the possibility of a turnaround. But until that happens, we have to go with the flow and continue to work where we have the formation of lower lows and lower highs. So I would suggest that you will have to hold your horses if you are looking from the longer term to medium term price trajectory. And unless there is any sharp move in today's session itself, we should be cautious. And rather than buying, I feel there might be the opportunity coming our way if we are able to target the short sale trade in such a way that the possible loss, if it does happen, should be at the minimum, and the profit maximization principle also needs to be in place. The longer term scenario is not really much different. It is also pointing to the trajectory of UPS on southern side with this formation of lower lows and lower highs. So for next couple of weeks, I feel it is going to be a uphill journey to keep rising. If it fails and keeps consolidating close to 150, 160 level in due course of time, we can expect it to start declining again towards the immediate support, immediate low of 133 or thereabout. So for long term as well, the things are looking damn bearish, and it is better for us to simply sit on the sidelines if you are an investor, or to actively search for opportunities to sell on rallies if you are a trader, because the UPS is not showing the signs of revival just yet, and it will be better for us. Keep in mind that it is also on a slower lane of making higher profit. It is making profit, but the growth is missing. Instead, it is seeing reduction, it is seeing contraction in the amount of its profit, and that is being reflected in the trajectory of its share price as well. So I would like to again remind that the next couple of weeks are going to be crucial. So right now it is not in a position to trade. We will have to allow it more time, and maybe in course of time we might get an opportunity to adopt the sell and rally approach in the UPS. So that's my outlook looking at the current price formulation of the UPS, where it is looking bearish in the medium to longer term, but it is at the moment bullish from the short term perspective. But then in the short term, it becomes very important for the stock to hold the momentum in a current trajectory over next couple of sessions, and if it does that, only in that kind of environment we can be fairly confident of its continuation, or else we will have to change and align our outlook for the short term as well, in line with the medium term to longer term charting. So for this session now, I have provided you enough of reasons and explanation of how things are unfolding. And if you have any query or any idea to share, do write to me in the feedback, and I will be more than happy to take the discussion forward. If you have liked this explanation and the similar videos and the webinars live streams available on the chart, do think about hitting the like button and subscribing to this page, and also you can access similar material from other webinar hosts as well as my prior videos where I have talked about different companies and their prospects. Now for the day I'm signing off. I will be back tomorrow with equally interesting stock to work with, so do come back. See you next time. Thank you all. Good.